Hello there, everybody. This is Craig at Max Trading. I'm here along with Eusebio, and we are ready for today's live trading session. And so glad that you could join us today. Thank you for being right on time. And let me take just a moment to also welcome those who will join us later by video. We appreciate you taking time to watch the video. There will be much to learn today as we watch Eusebio handle the charts. And I just should remind everybody that this is not a trading room. We are not making trade calls. So nothing you see should be considered as trade entry or exit advice or recommendation today. Everything here is for educational purposes only. And primarily, we want you to have opportunity to see Max Trading System methods and indicators at work on real-time charts. We know that for those of you who are considering a trading system, it can be difficult. Unfortunately, the world of trading has more than its share of scammers and liars and outright thieves in many cases. And so one of the best ways that you can evaluate a trading system is to have an opportunity to see it on live real-time charts. Why? Well, simply because you can't hide anything. It's all there right out in the open. You can't exaggerate. You get to see the Max Trading System at work on real-time charts. And today it just happens to be in relation to the news releases coming up from the Bank of Canada. So we're hoping the price action will be very good, but we don't know. Our crystal ball doesn't work very well, so we just have to take whatever the market gives, and Eusebio is the perfect person to show us how Max takes advantage of whatever the price action happens to be. Some of you have not met Eusebio before. You're about to be in the hands of a man who knows the marketplace. He is a very skilled trader. Many years of experience, has been trading the Max Trading System full-time for many years now. And so we're looking forward to a great experience together this morning. Thank you for being here. And Eusebio, thank you to be with us, and I'll hand the microphone over to you.
Thank you very much, Craig. Hello, everyone. Welcome to this open house session with the Max. I hope you are all fine and all safe. Before starting, let's make a quick audio and video check. Do you see my screen? I'm showing 6 pairs. And do you hear me well? If you would like to type a yes or a Y in the question area of GoToWebinar. Okay. Thanks. Thanks, Stan. Thanks, Jitendra, Harald. Thank you very much. Perfect. Okay. So, in around 10 minutes now, a little more than 10 minutes, so we will have the Bank of Canada announcement with its outlook report, monetary policy statement, policy rate, and so the interest rates, of course, the overnight rate. There was some expectation about the Bank of Canada raising its interest rate soon or later, but rather soon. Today, I don't think so. The expectation is an unchanged interest rates. When you look at, for example, the forecast on Forex Factory, you see that the forecast is identical to the previous months. But there are some who consider that because the economy is recovering faster than in other countries, because the employment numbers are improving, because there is some inflation, they consider that all these things are calls for a soon decision by the Bank of Canada to raise its interest rates. But this is not what we are seeing in the CAD pairs. I have taken 4 CAD pairs, the US dollar CAD, of course, the pound CAD, the euro CAD, and the CAD yen. And we can see that for all these pairs, if I widen the chart, we have a weak CAD against the other currency. We have the US dollar CAD going upward, the pound CAD going upward, the euro card going nicely upward, with a possible trend reversal, of course, when we are approaching the news. The card yen, in this case, is going downward, so showing a weak card. And I have also taken two other pairs, the pound US dollar and the pound yen, which are among the most volatile pairs, at least for the moment. And so we'll see what will happen. I have no idea what the decision of the central bank in Canada will be, and then we will react to that decision. We will not need to rush immediately after the announcement, because later, 1 hour later the announcement, there was the press conference, but we will not wait for the press conference. We will have a quick look to the rate statement or the money policy report, which will be made available as soon as the announcement will be made, now in a little more than 8 minutes. And so we will see if something happens in these pairs. And if this is the case, I will show you how the MAX can handle such kind of situation. If not, I will force a trade on any of these pairs, and I will show you how the trade risk management is done with the MAX in order to try optimizing the result of the trade, either minimizing a loss or producing a profit when the circumstances are not necessarily optimal. So, but we still need to wait for around now a little less than 8 minutes. If you have questions, so of course you can post them in the question area of GoToWebinar, and from time to time I will have a look and I will try to answer at my best to this question. And I see one. Is this going to be only about Forex, or do you go over stocks as well? We can go on stock, but with this platform, usually with MetaTrader, we use MetaTrader as a platform to teach the MAX and to demonstrate the MAX. And unfortunately, not all the broker provides a stock on their server. And when they provide stock, they are CFDs. They are not real stock. They are CFDs, contract for difference. But they emulate perfectly the stock, but we don't have a lot of them. But if you have another platform, like for example TradeStation, if you trade the futures market, like for example the currency contract or the indices contract, like the YM, the ES, and so on, with TradeStation, with NinjaTrader, for example, we have almost all our indicators available on that platform, so you can trade directly on that platform with the MAX. So it's true that I could have added a stock index, but because it is the Bank of Canada, and because I follow only 6 indices, the Dow Jones, the S&P 500, the NASDAQ, so 3 US indices, the German DAX, the FTSE 100 in UK, the two last being 2 European indices, and the Nikkei 225 in Japan. So I don't follow a Canadian stock index, so I will not illustrate a stock index today. Today I want to focus on the Bank of Canada announcement, and so this is why I'm using essentially Canadian pairs. But otherwise, Bevin, the MAX apply to any market. So it applies to the stock market, it applies, if you can trade stocks, and if you trade optionable stock, you can also trade options. It applies, of course, to the futures market and to the Forex market. Very often on MetaTrader, we have some commodities like gold, like crude oil. You can trade these instruments also with this platform. And one of the driving factors for the CAD is the price of crude oil, and with the price rising these last days or weeks, so this has a tendency to favor the CAD. But today, of course, the Bank of Canada announcement is much more important, and so we will see what this will produce. Now, perhaps because we are seeing that the CAD is weak today, this is perhaps an indication, but we cannot be sure of that, This can be an indication that the big boys are expecting some positive decision from the Bank of Canada, and they are pushing the CAD in the opposite direction. They are making the CAD weaker for them to obtain better price for their position going long on the CAD. This is a possibility, but this is not certainty, and we will have a better idea when the announcement will be made now in 4 minutes. And so the plan is the following. So if the announcement is positive, if they are hawkish, we will consider that the CAD will have to strengthen, and we can go long on the CAD. This means short on the US dollar CAD, short on the Euro CAD, short on the pound CAD, but long on the CAD yen. If the report is dovish, so we should see the CAD continuing to weakening, but not too much because it is already weak. So in one case, we will have a good opportunity for trade. In the second case, the opportunity will be riskier. And if there is a neutral tone used in the statement, in the monetary policy statement, then we will have some indecision in the market, so some uncertainty. And so we will see. This is why we have never to rush as soon as the news is released. We have to check what the price is doing. We have to check if there is an increase in the volatility. We will have, if they consider, so what to do. And generally, this takes a few minutes. So I'm using the Max Primer template today. And along that template, you can see that from time to time, we have also horizontal lines on the chart. These lines are what I call possible supply or demand level, or name it if you want, support or resistance. They have been established last week, last Saturday. I update them every Saturday, and you can see how the price nicely respects these levels very, very often. So, and they are really useful to define where we can possibly consider the price will go, and when, if we are in a trade where we can consider taking some or reducing some risk in any position which are taken. So 2 minutes before the news. Now, if you have another platform than MetaTrader, very often that platform has a tool to develop indicator. For example, if you take a TradingView, they have a script called PineScript. If you take Thinkorswim, there is also a coding language which allows to develop indicators. We cannot be coders in any of these on all these platforms. So what do we do when you take a course with the Max? We provide the indicators. We provide also the source code, the MetaTrader 4 source code of that indicator, so that you have the possibility to recode these indicators on your own platform. So now let's wait here. I'm going to switch to the calendar. I'm going to make my calendar a bit smaller to keep some eye on the platform. So I will do that way. Normally, if I make an update, we should see the green button with the Bank of Canada. Yeah, it is already there. After that, I will show you the link you can use if you want to follow the press conference in 1 hour. So now you see that the US dollar CAD, the Euro CAD are dropping, so making some spike to the downside. This means that the CAD is very positive. There is no change, as you can see, in the overnight rate. Now let's see the monetary policy report. I'm going to click here on this, no, sorry, not here, but on the news panel. And let's have a quick look. We will come back to the chart after that. So the monetary policy report here. So inflation targeting and the economy. The bank's mandate is to conduct monetary policy to promote the economic and financial well-being of Canadians. Of course, this is the usual blah blah of the central bank. Canada's experience with inflation targeting since '91 has shown to be the best way. Okay, let's show the full story, and I will try to read in diagonal. I will not read everything because there are 33 pages, but I will go directly to the conclusion or the overview. Support of the economic recovery. Inflation is going upward. So they seem to be somewhat positive. And so this is something you can read, and there is 33 pages, and the idea is not to analyze necessarily all the details, but at least to read the report in such a way to define if they are positive or negative. And if you read here some comments, so held its target for the overnight rate at the effective lower bound of 1/4% with the bank rate as 0.5% and the deposit rate at 1/4. Bank extraordinary forward guidance on the path of the overnight rate is being maintained. So everything is unchanged, but the bank is ending quantitative easing and moving into the investment phase during which it will purchase government of Canada. So there is some positive notes so here, and so it's not a surprise to see now. Let's switch to the platform. It's not a surprise to see this spike in the Canadian dollar pairs, and so if we measure this spike, we have 85 pips on the US dollar CAD, which is a lot. So we have somewhat a very nice positive situation with the Bank of Canada. We should see now the CAD strengthening a lot, and indeed when I check on my currency meter, my different currency meters, so the CAD is now almost the most strongest currency. And so we have some opportunity. Now, in order to define a trade, we have to consider the following behavior. Generally, when there is a positive news, with a positive or negative news, when we have some big deviation in the news release, or when we have some important positive or negative tone in the way the central bankers are talking, this is why it is also a good thing to listen and watch the press conference. And if you have some time in 1 hour, I advise you to do that. I will give you the link in a moment, or I will show you where to find the link. So the behavior generally contains 3 steps. The first step is a spike in the direction of the news. And so this is what we have seen. Positive tone, so a spike to the downside for pairs having the CAD as the quoted currency, or to the upside for pairs having the CAD as the base currency. The second step will be a retracement, and we have to wait for that retracement. We never know how deep the retracement will be, but we have to wait for the retracement. It can take some minutes, and ideally, we have to wait for the retracement to our ETF line. The ETF lines are these orange and yellow lines on our chart, which are a rather sophisticated kind of moving average. Now, if the price does not reach that line, that's perfect too. So, but we will have to wait for a retracement. Sorry, and then after that, the third step will be a resumption of the movement in the direction of the news, and it is this movement that we can trade in a more safely way. So now what we have to do is to wait. You can see that on my chart I also draw some vertical lines. If I take, for example, the US dollar CAD, so I draw vertical lines. Orange dotted vertical line represent the open or the close of the market sessions with the Frankfurt Open, the London Open, the Wall Street, the US Open, New York Open, the Wall Street Open, because Wall Street has sometimes some influence also in the Forex market. Then we have the the Frankfurt close and the London close. Yeah, we have an overlay between the Frankfurt close and the press conference with the Bank of Canada. And with red lines, we have the news releases, or the news releases which can have an impact on the pair. I ignore the news which have no impact on the considered pairs. So now we see that the price seems to begin a retracement. You can see that on the other pair, the pound US dollar, the pound yen, so the announcement has no effect. And so when this is the case, if there is no reason to trade these pairs, you can simply ignore them. So I will consider only these four card pairs. And so I will minimize these two pairs, and I will retile my window to have a better look on the four remaining pairs. Vishal, I hope I pronounced correctly your name, is asking, does the trade companion indicator repaint? Please clarify. Thanks. Okay. This is an interesting question. No, the companion indicator does not repaint. But what is a repainting indicator? A repainting indicator is an indicator which is redrawn every time a new price comes, a new quote comes in the data feed. And the impact can be more or less important. If you take, for example, the original Fisher transform indicator, so whenever a new price comes from the data feed, the entire Fisher transform indicator is redrawn, and so it can repaint. So it repaints in this case. The influence may be much more important in recent points in the indicator and less important in further points in the indicator. Here, it does not repaint, so the slow bias does not repaint, but it is based on a higher time frame. When we trade on the 5-minute time frame, the slow bias is based on what is happening in the 30-minute time frame. And so as long as 30 minutes has not passed, in fact, the indicator for the last 30 minutes can change color from green to red or red to green. But this is not repainting. It's simply illustrating what is happening in the 30-minute time frame. Okay? Because indeed, so when a 30-minute candle is closed in the 30-minute time frame, then the last 30 minutes or the last 5 points or 6 points or 6 candles in the 5-minute time frame are definitively fixed. As long as the candle has not closed in the 30-minute time frame, of course, the color can change. It is exactly what happens with any indicator in the time frame. If you take, for example, let me widen one of these pairs. Let's take, for example, I will take the Euro card this time. We have here an oscillator which is called the stochastic of the RSI. It is a momentum oscillator. As long as the present candle is not closed, this indicator will move upward. The last point will move upward or downward, depending if the price is going upward or downward. So we have the same effect, but on a 30-minute scale with the slow bias. Okay, is this understood, Vishal? And so in some circumstances, this may be a bit disturbing. Yeah, please, any questions you want. It may seem a bit disturbing, but fortunately, this does not happen frequently. From time to time, it happens, but personally, I don't care. I trade what I see. I'm talking about the bottom red and green line companion indicator. Yeah, this is what I was talking about. So the slow bias is that green and red indicator. We call it also the slow bias. And so it is exactly the explanation I have given. In fact, the companion indicator is made of the two indicators. We have the green and red line is called the slow bias, and the orange and blue line is called the fast bias. And when we have to consider some types of trend reversal, both must be used. Most of the time we use only the slow bias, the green and red line, but in some circumstances we have to use the combination of both. No, Vishal. So the question is, I know it will continue to move on the current bar, the current 30-minute bar, okay, which is still moving, but once the bar is closed, can it still change? No, once the 30-minute bar is closed, the indicator is fixed. It does not change. It does not repaint. So here we are still waiting for the pullback, and the pullback is not coming yet. Sometimes it can take times. Now on the pound card, we have the price right on a max price level, so supply or demand level. Let's see how the price will react on that level. For all the other pairs, we have placed enough before reaching such another support or resistance level. But if 30-minute price change drastically, the indicator on the 5-minute will repaint. It will adapt. It will adapt to what is happening on the 30-minute time frame. Yeah, indeed. If I consider, for example, let's take the CAD yen. The CAD yen is usually a pair which is not very, very volatile. Look what is happening, for example, here. See, or here. There was an attempt for a trend reversal when the line moves from green to red, but these two trend reversals have been short-lived, and the long trend has, or the uptrend has resumed. And so this happened because it depends on what the 30-minute time frame is doing. Look here again, so here. And this is why when you use an indicator, whatever the indicator, you need first of all to know how the indicator is built, and you need to know how the indicator is behavioring. And so understanding the behavior and the construction of the indicator will help you to better interpret your indicator. And this is true with any indicator you are using. For example, if you take the RSI, so the stochastic of the RSI, which moves between 0 and 100%. Is it because the RSI is close to 100% level that the price will make a high and will reverse? Or is it true that when the RSI will be close to 0% level, the price will have to make a pullback to the upside and so make a low and reverse? No, this is not necessarily true. What happens very often is the RSI will flatten and the price can stay in the same direction for a lot of time. Okay? And so an indicator, simply by the fact that the indicator is built on a small number of candles. And so if for the RSI, the indicator is built to take into account, for example, these candles, or I should have drawn the rectangle on the chart itself, for example, these candles, for the RSI, it's around 16 or 17 candles. Any other previous candle have no influence in the RSI behavior. So the stochastic of the RSI takes into account the recent behavior of the price. And this is why, in fact, an indicator can never be used as a way to predict what the price can do. It's simply mirroring what the price is doing, and so we have to use the indicator in a complete different way. Stan is asking, it is a long text, so I need to widen my question area. So while we are waiting for a retracement, can you please go over, without giving out any secrets, how the max method would have traded yesterday, GC, so pound card, strong move down and then up. Can you please do the same for preferably today natural gas? If you don't like natural gas, I don't care for the instrument stamp. Can you please, again, I'm not asking for any secret revelation, just want to see how your method handles certain types of moves. Okay, so, yeah, I know, GC is gold, okay. Yeah, because GC is also the abbreviation for the pound card, for the pound card. Let me check, first of all, what was my bias for gold yesterday. So give me just one moment. I have to retrieve some information, so, and I'm still having a look for the pullback. So it is on my E drive, my trading system, intraday bias. And so yesterday we were the 26th of October. And for gold, my bias was to the downside. So let me show you first of all my bias for gold yesterday. So it was to the downside. These white lines represent usually my trading session, okay? Starting 15 minutes before the London Open and ending usually with the London close. And a few minutes after the London Open, I established my directional bias, my global context bias, and my context, my analysis told me that during the European session, we had to trade gold downward. So we had to consider only short trades. And so now let's take the gold chart. My gold chart is here. And I will apply my template, the Max Primer template, which is this one. And let's check yesterday. Okay, so yesterday, so my bias was short after the London Open, and the London Open was here at 10 on this platform. Let me quickly note London Open. I will not note the other markets. So with a short bias, whenever we have a change in the trend from green to red in the slow bias, then I would have looked for a short setup. And a short setup is indicated with a green dashed vertical line, that way. And so with the change in the trend, so I would have looked for a short, and here we have, in fact, a short entry setup. This first trade would have been probably a small losing trade, because you can see the price has moved essentially sideways, and when the trend has reversed, this would have been the last moment to close the trade. So this trade would have been all pretty much break even or with a very small trade, small loss. And we mark an exit with a magenta line. And then I would simply wait for the next short trade. And so the next short trade would have come where? So would have come right on this candle. And so I would have made my entry. So here, my stop loss would have been somewhere in this area, and then I would have handled the trade until most probably the other trend reversal. And because my bias was short, I would have ignored this upward reversal. So I would have taken one small trade, probably break even or with a small loss as the first trade, and then a nice winning trade with possible scalings in this trade, as long as the slow RSI was the slow bus was red. And by the way, the trend reversal has happened exactly on this candle. This candle is the long entry setup, and this long entry setup would have called the close of the short trade if at that moment I would still be in the short trade. Okay? Yeah, we always enter, when the setup bar closes, we always wait for the setup bar, the entry setup bar to close. Then we define our entry level. We apply for that what we call an entry tolerance. In the course we explain why, and if the price hits our entry level, we have the trade. We push on the button to open the trade, and then we handle the trade with our scale-ins and our scale-out. Okay? So 1345, 1345, 1345, another 1345. At 1345 or so, let's check 1345. No, at 1345 there was no, we were still in the trade at 1345, so here. We were still in the trade, okay? We had our entry in this area, or perhaps even not an entry. Yeah, perhaps the entry would have been made, let's check it more carefully. Let me check first of all what the other pairs are doing. It's an interesting situation, so here. So let me iconize. Okay, now we have the pullback being made. This is interesting. Let's come back to the gold pair, so here, to the gold instrument. Let me check. Yeah, we would have had the entry right here, okay? Right here. Then we would have had an exit right in this area, you see, with a small, a very tiny loss, and then the final exit in this area with also a tiny loss, so a tiny loss. And there was no other entry after that, because after that the trend has reversed, so no short entry. The next short entry was on this candle. Okay? Then possibly here, in this area, with the setup bar being this candle, and giving again, so I have to draw it in green, so this one, and giving again a small losing trade, because the entry would have been made, so here, then an exit somewhere, so here, and then the final exit would have been made at worst, so here in this area, So giving a second small trade with no scaling in this short trade. So no scaling in the first and the third trade, but nice scalings in the second trade. Okay? Oops, sorry. And natural gas, let's have a quick look to the chart now. Okay, now we may have perhaps an opportunity. We will come back to the natural gas later if we have some time. Okay, but the process is exactly the same. So let's check here what we will get. The price has reached our ETF line, not exactly, but quite. See, the price is very close to the ETF lines. This is the best situation with the EuroCAD. And so let's see at the close of the candle in 1 minute if we can, let's say, force a trade. And I will widen these two charts now, that way. And I will put my max trade monitor on these two charts. So max trade monitor, I will take this one. And for the EuroCAD also. Let's reset everything. Okay. And now I have to place my stop loss correctly. Okay, now let's check if we have a valid entry setup. No, we don't have a valid. I'm going too fast. We have here a valid entry setup. with this candle, this red candle. So I will make an entry. So on this level, I'm going to use a blue line to illustrate my entries. So the open is at 1 to 2. So at 102. Let's say there, yeah. So if the price touches my blue line, I will force an entry, and it will be a sell. We are far away enough from the next resistance level. The pullback has not been a big pullback, but that doesn't matter as long as the price reaches the ETF lines. We have a pullback deep enough, and when we have an entry setup, then we can consider taking the trade in the direction of the news. Now, of course, the market most probably will wait for the press conference, which will start in around 33 minutes now. And the press conference may have also an impact in the market, depending on the tone used by the central banker. But now the CAD is certainly the strongest currency. The US dollar is one of the weakest. The euro is strong too. So between these two, the best opportunity comes with the US dollar CAD. I'm going to prepare for the US dollar CAD, because in 2 minutes we will have also an entry setup, a possible entry setup. We will have to validate it. Okay, let's pay attention to the Euro CAD. So the Euro CAD is not the best pair for the moment to trade, but the context is strong for the CAD. And I just would like to illustrate the trade risk management. So, okay, now I open the trade, so I push on the sell button. If I show the trade panel, you will see that the trade has been opened on the Euro CAD. So show view terminal, and so the tool, the max trade monitor, has opened 34 microlots with a risk of 1%. My risk is 1%. And so the trade risk manager calculate automatically the size of the trade when we fix the stop loss and when we fix the risk as a percentage of the trading account. So let's close the terminal panel for the moment, but the trade is open for the Euro CAD. And let's see for the US dollar CAD in around now 1 minute to see if we have a valid setup. Because it is not because we have the correct pattern. An entry setup is always a specific pattern the price is doing. But we need to check technical conditions. Technical conditions are conditions which must be fulfilled. There are mandatory conditions and optional conditions. And among all these conditions, we need to have a majority of them in agreement. We are in agreement with the global context. So for the moment, this candle will not be a valid entry setup because we don't have all the conditions being fulfilled. And when I have some time, what I do is I take the time to mark my chart with green or magenta vertical line to illustrate our entry setup. And so now let's consider here. 5 seconds. Okay, we have a potential setup bar, but we have only two 2 conditions out of 4 being fulfilled on the US dollar CAD. We have to check what the ETF lines are doing. We have to check what the signal bar is doing. We have to check what our Stochastic is doing, and we have to check what our companion indicator is doing. And so we don't have enough conditions being fulfilled. So we need to wait. Perhaps the next one will be a valid setup. So now in our result panel, if I take for example this panel here for the EuroCAD, we have 2 main lines. We have the ESL result. ESL means emergency stop loss. So the ESL result gives the result of the trade if the price reverses and hit our stop loss, which is represented by this horizontal dashed red line. So I will lose a little less than 1%. Why not 1%? Simply because when we calculate the trade side, there is a small round off which is made in order to have a correct trade size. And so we round off by default. And so the risk is less or equal to 1%. The second important line is the x66 profit. This is the profit as a percentage of the trading account, which is made if I push on the x66 button to close the trade at the present price. And so this x66 profit always changes when the price moves upward or downward. For US dollar CAD, we didn't have the Stochastic and whatever. So the condition we have to look, Stan, is on the ETF line, signal bar, the Stochastic, and the companion indicator. And the details are explained in our course. So we have no enough conditions to have a valid setup. Okay? Now with the max primer, we have only 4 conditions: the companion indicator, the Stochastic, the ETF lines, and the signal bar. But they need to be in agreement. Have you taken the primer course, Stan? Not yet. This is why you don't understand, in fact, what the conditions are. I will not give the detailed explanation so here today, okay? Gary, for the max standard, we use the same template, but with additional indicators. We use more indicators, okay? But it is primarily the same, essentially the same template. I will have to pay for infinite debt. That's fun. No, we have established the price of the max primer course at such a low level, 100. I don't remember exactly what is the price, $159, I think, or perhaps even less, just to make it affordable for everyone. And the max primer is profitable. It takes more time to grow an account, but it is profitable. So now that we are in a trade with the EuroCAD, so we have to wait. And in a few seconds, now it happened that this candle will not be a valid setup bar, but in 40 seconds we may still have a lot of things happening. So let's check. Just in case of, I will adjust my stop loss. So somewhere in this area, yeah, this seems to be a good place. It will most probably close as a blue candle, so it will not be a valid setup. Okay, it is a blue candle, so by definition, for a short trade, a blue candle is not a valid setup bar. So there is even no need to check the other conditions. So we will need to wait for the next candle. Now in the EuroCAD, with this blue candle, when it will close, if it closes as a blue candle, this blue candle will be what we call an exit setup bar, because we will have an exit condition triggering. We have several types of exit setup. We have exit setup based on the behavior of an indicator like the Stochastic. For example, in the presentation webinar a few days ago, last Saturday, I have explained that when we have a divergence, for example, a divergence between the price and the Stochastic, this divergence is an exit setup. But we have other exit setup. So we have exit setup based on a unique indicator. We have exit setup based on pure price action. For example, if we have a long bar, like the bar here with the announcement, a combination of price action and indicator, timing consideration also, for example, if we are in a trade and we are facing another important news release, then we will have to close the trade before the news release, and so on and so on. We have also as exit technique, exit setup, the trend reversal, the trend exhaustion, the trend invalidation. So all these are different nuances of the exhaustion of a trend. Some of these exit techniques will call for a partial exit, an MX, and some will call for an XXX, a total exit. So what is the difference between a partial exit and a total exit? Whenever we open a trade, we consider that the trade is made, you can see here, is made of 2 units. Each unit representing half of the trade size. When we make an MX, we close just 1 unit, and we keep the other unit open in order to have a running unit. And when we make an XXX, whatever the number of open units, we close all the open units. And this is not very important when we trade with the max primer, because usually with the max primer we open the trade, we make an MX, and then we make the XXX. But with the max standard, when we make scale-ins, each scale-in will add 2 units, and so the number of units may be extremely variable. So whenever we make a scale-in, we add 2 units, having the same size as the 2 initial units, and when we make an MX, we close only 1 unit, following the FIFO rule. The first open unit is the first closed unit. Now, whenever we are in a trade and the price is moving in our favor, we will have also to check if there is an opportunity to adjust the stop loss. Because adjusting the stop loss is a way also to reduce the risk. For the moment, the risk on the EuroCAD pair is minus 0.95%, so a little less than half 1%. I see on the chart that I have the possibility, we have rules to adjust the stop loss. So I see on my chart that I have a possibility to adjust my stop loss. And so I can adjust my stop loss by a few pips. And so let's do that and observe how the ESL result will change. So now I'm going to adjust my stop loss somewhere in this area here. And you can see that now the risk, the ESL result, which represents the risk, is reduced. So in the worst case scenario, if the price reverses and makes a pullback and hit my stop loss, I will lose only a little more than 0.5%, which is typically the size of a losing trade with the max primer. Now, I was telling that if this candle closes as a blue candle in such a way that we have an exit setup with one of our indicator, I have 2 choices. Either to make an MX, and that MX will close 1 unit, perhaps at break-even, with a small profit in this case, or with a small loss. It will depend how the price will move when the candle will close, or I can choose not to make the MX. And I will explain why in a moment. So now the candle has closed. We have indeed an exit setup, and I will not consider that exit setup. Why? When we consider a trade and we have to make an MX. We have two choices. Either when an MX comes, we take that MX if the price hits our exit level, or we can decide to apply what I call a discretionary decision. The discretionary decision is much more described in details in our Max Advanced course. It's an exit setup. It may apply also to the entry setup, but they apply mainly to the exit setup. It's a situation when we can decide not to apply the exit technique. And the process is always based on the trade risk management, because it is, of course, out of question with a discretionary decision to introduce subjectivity in the trade or in the decision. And so here, my discretionary decision is justified by the following arguments. A few years ago, 3 or 4 years ago, I have made a deep analysis, statistical analysis of all my trades since 2008. So that represents several thousand of trades. And at that moment, whenever an exit setup was appearing, I was making systematically my MX. And then I ask a question, what if I ignore my first MX and I make my MX only if I have a decent profit, accepting the fact that I may have a full loss, a loss on the stop loss. Because if I miss this MX, so here I should have closed 1 unit at break even, reducing further my risk on the trade. So if I miss that skip, if I skip that MX and the price hit my stop loss, I make a larger loss. So this is something I had to accept. But my question was, what if I accept this kind of situation? And I have observed that in my trade, with my trading style, my profit would have been way, way larger, applying the discretionary decision. And so now this is what personally I apply when I use a small risk per trade, and this is mandatory. And for me, a small risk is maximum 1%. Very often I take a smaller risk, 0.5%, for example, or 0.75%. It depends on the context. But so when I take a small risk, so I skip all the MX, not giving me a profit large enough. And what is a profit large enough? It's a profit giving me at least, it's an exit giving me at least a profit equal to half of my stop loss. My stop loss size was here around 40 pips, if I remember correctly. And so my minimum profit should be around 20 pips, so around this level, approximately. We have always to fight with MetaTrader to choose the line, okay, here. And I will set my objective. I see I have closed the trade. Oh, gee. Well, I will have to reopen the trade. I have accidentally closed the trade, so it doesn't matter. I will reset all these numbers and I will take the next trade so far. So let's do it. Reset, reset. I'm sorry for that. This is something I should have made earlier. Usually when I open the trade, I fix my minimum profit level when I will have to make an MX. So this is what I will do now on the next entry setup. But you can see now in the terminal panel that the trade has been closed. There is no open trade. And if I go in the account history, so where it is the US dollar CAD. So you see it has been closed with, in this case, but it is by accident, a small profit. Okay. Now let's wait for the next opportunity. No, it was not that date. It must be the last one. This one, yeah, this one. EuroCAD 34 micro lot, so with a small profit here. But it is an insignificant profit, and it is not illustrated of what I wanted to show. Now let's wait for the next opportunity. We are approaching the moment when the press conference will be held in 15 minutes. Now, you have seen that I have pushed on the reset button. This button RP is the reset panel, the reset button. The reset button has the effect to erase all the numbers, all the results in our data panel, but also to apply the compound concept. This means that when I will take the next trade, the size of the trade will also depend on the new balance in my account. If I do not reset the numbers, so the initial balance will be used to calculate the new trade size. And so this means that all the trade will be accumulated based on the same initial balance. So no compounding effect in this case. Personally, I always like to compound my result. Compounding in case of a profit, uncompounding in case of a loss, of course. In fact, this shows that the pullback was not finished yet. Okay, the pullback is still holding. There has been a first attempt which has failed. So the pullback is still unfolding. But sooner or later, this pullback will end and the trend will resume to the downside with such a strong CAD and a rather weak US dollar and now euro, which is less favorable than previously. We should see another good opportunity to go short. If the market is a little bit slowing down, it's because now we are approaching the moment in a little more than 12 minutes and a half, the press conference. And you will see this happens frequently, not always, but very frequently. During the press conference, there is usually an increase in the volatility, depending on the tone used by the central banker. And you will see that if he alternates good news and bad news, you will see the price moving upward, downward, upward, downward. And this is really fun to observe. Let me show you where you can find the link for the press conference. When you go on the Forex Factory calendar, you see here, so at 5 p.m. my time, you can adjust the clock of your Forex Factory page. Of course, if I update it, it will show. Oh, it is the New York time. The New York time. So sometimes Forex Factory change the clock because I am not logged in. So we have the press conference. So here at 11 a.m. New York time. If you click on this folder icon, you will have the source, Bank of Canada latest release. There are two different links. The first link is the link for the Bank of Canada, and the second link is some thread inside the Bank of Canada website. If we click on this latest release, you will see here webcast, and normally here you see October 27 Monetary Policy Report Press Conference webcast. So you click on the link and you will have access to the webcast, in this case on YouTube. If you click on the start button, so we'll see now it will start in 10 minutes. And so you can follow the press conference, and really I advise you to follow the press conference and observe what the chart is doing in parallel. And you will understand that whenever the central banker will be pessimistic in his comment, the currency will weaken. And whenever it will be optimistic, the currency will strengthen. So we will not do that, but I really advise you to make that exercise because it is really very, very enlightening and educating. So now we have perhaps a resumption of the down movement, but we need to wait for a valid entry setup. Have the natural gas contract on this platform? Let's check. Symbols. Let's see. Is crude oil. This is natural gas. Yeah, natural gas futures. So let's show the symbol that way. It has been added to my market watch, and let's put the chart of natural gas here. And yesterday you would have had exactly the same type of trades. You see, now I don't add the natural gas in my list of instruments I analyze, so I don't know what the context would have been for the natural gas, but the concept is the same. On this candle, we had an entry setup to go short, with an entry here, and if we wait for the trend reversal, the trend reversal was made on this candle, so with a close right in this area. And then if we consider going only short, another short trade would have been taken, so here on this candle or this one, perhaps this one, yeah, with an entry in this area. And if we wait for the close or the trend reversal has happened, so right here, with a close at most at this point. And then depending, so whether the context was good to take the long trade or not, let's suppose the context was good to take a long trade. So let me erase these two vertical lines. The long trade could have been taken where, let me check, precisely just after the close of the previous short trade. So this would have been also a long entry immediately after the close, with a close right here for a nice ride. Let me check. Yeah, here at most at this place. So with a nice ride to the upside. Okay, this is the power of the max using. If we use only the technical aspect of the companion indicator, this shows the kind of trade we could have taken. So we would have had a short trade, so here, then another short trade, for example, here, and then a long trade, so here. Of course, perhaps a long trade also here, but the trade would have been here a small losing trade. A small losing trade, so in this area. Okay? No problem, San, you are welcome. Now let's come back to our two pairs. So we are seeing that the euro card is trying to make a resumption of the downtrend. And so let's see if we will get soon a valid entry setup. We still have time, so we will be together for still around 1 hour. This is the aim of this kind of open house session, Stan. We are here to answer a lot of questions you may possibly have, without, of course, making a trading course, because we have our courses, but at least to show some aspect of the max. Yeah, David, there is a replay, so the sessions, all our sessions, training, presentation, workshop, open house sessions are always recorded. Everything we do live are recorded, and the recorded video will be made available by Craig. So now, in order just to give you an idea of what I'm doing, so here now, in order to have another short entry setup, at minimum, we will have to wait for the two ETF lines to cross downward. For the moment they are upward. We need to wait for them to cross downward. So we need to have a small white down arrow appearing at the close of a candle, and then after that we will have to look for a valid entry setup. Jared asks, just to clarify, the max system includes indicator for NinjaTrader. No, by default, because the trading is made with MetaTrader 4, we provide a template, indicators, script, and expert advisor for MetaTrader. But when you complete a course, Max Primer or Max Standard, you will have access. You will become a member of our forum, because we have also a forum, and in our forum, in the corresponding thread corresponding to the course you have taken, you will have a thread where you can download the indicators for NinjaTrader. And in the course or during one of our practice sessions, we will show you where to find them. But I cannot guarantee, because it is not under my control, I cannot guarantee we have absolutely all the indicators. I know that we have most of them, but I have no idea if one is missing. Can you please show the NQ? NQ, you mean the Nasdaq, Vishal? Okay, let's show the Nasdaq. And I will still have to keep an eye, because here I feel that setup is coming soon. You see the two ETF lines are wants to cross downward. If we continue to have red candle, it will be the case. But let's show quickly the Nasdaq. So here, chart window. And let's put the Max Primer template, Max Chart Primer, where it is. It is this one. What is my bias for the stock market today? I think my bias is to the upside. Let me show you my bias, yeah, to the upside for the stock market. So we had for the US session, the European session, so a nice long trade. So here, you see, with a setup, if I take a Max Primer setup, there was an attempt first where, so here, a first attempt here, but which would have failed, or probably would have stayed in the trade because the stop loss would have been way, way below these lows. So we would have taken all this up movement until this point, approximately. So a movement of approximately 100 points in the Nasdaq. And now we are waiting for the trend to resume to the upside to take a second trade. Okay, that's good, Vishal. What is the difference, if any, between the ETF Max template and the Primer template? Oh, there is no difference, Philip. Let me explain some history of the Max. When Jim has created the Max in 2007, so many years ago, it has been called the Max, okay? And then we were living a few months later the subprime crisis. If you remember, or if you have lived yourself the subprime crisis in 2008, there was a lot of volatility, extreme volatility those days. And I told myself when Jim unfortunately passed away in 2009, I told myself, well, human beings always go to the extreme. So we have extreme volatility now because of this subprime crisis. But what if, what the market will be if the volatility will shrink? And so I'm ready to bet that we will have low volatility. And this is indeed what we have observed. Over here, we have seen a decreasing of the average daily range. And when we trade trends, this may be a problem. And so I have introduced two improvements within the Max. The first improvement was to introduce the ETF concept, which is based on these ETF lines. and a first version of the companion indicator, which has given to me the second concept, the second change, another definition of what a trend is. And just to mark the difference between the way Jim has defined the max and the two improvements I have brought to the max, we have decided to temporarily call the max the ETF max. But recently, because all these concepts now are included in all our max courses, we have decided to drop the ETF term in the name of the max. And so there is no difference, in fact. Okay? Now, it seems that we will have most probably a valid entry result, but you can see also that the slow bias has a tendency to come back to green. This is an excellent opportunity to observe that behavior. The slow bias has a tendency to reverse from a downtrend to an uptrend. But you will observe, because it is becoming green, but if the candle closes as a red candle, this means that if the price continue to move downward, you will see the green color disappearing, coming back to red. And so let's observe that. And of course, to have a valid short entry setup, we need to see the slow bias to be red, not green. And this is why you can see some or observe some details in my chart. In all my charts, I have always that label which says patience and disciplines. And we will always have to be patient. We have to wait for the price to come to us. We have to wait for the conditions to be fulfilled to take a setup. And sometimes we have to wait 1 hour, 2 hours. So if it closes green, will you exit completely? No. No. It's not because it's becoming green that I will close the trade. If I am in a trade, which is not the case because the trade has been closed, but let's suppose the trade is opened and the slow bias turns to green. At that moment, I will close my trade only if I see a long entry setup. It's not because the slow bias has turned or is turning to green that we will have necessarily an entry setup immediately. Okay? The entry setup is a specific pattern, so we will have to wait for the specific pattern. When the pattern is complete, we will have to check all the other conditions. If all the other conditions are fulfilled, or if enough of them are fulfilled, because we have a very specific concept which means that in order to avoid paralysis by analysis, we do not require all the conditions to be fulfilled, but a majority of them. Some are mandatory, some are not mandatory. And so we need to have a majority of them, and among them, the mandatory, of course. If all these conditions are fulfilled, then we have a trade. So now the press conference has begun with the Bank of Canada. And if the trend seems to resume, or the downtrend seems to resume, this means that the tone used by the central banker must be hawkish. Hawkish, you know these two terms, hawkish, dovish. Hawkish means optimistic, dovish means pessimistic. And when the central banker is hawkish, the currency has a tendency to strengthen. When he's dovish, the currency has a tendency to weaken. The pound card can be also a good opportunity to consider. Let's have a quick look to the pound card chart. You see, it is running around this support level or resistance level, resistance to the downside or support to the upside, but the price is still hesitating to define a specific trend or trend resumption. So let's still wait a few minutes. The two ETF lines are flattening, so this means that they prepare to cross, but we have to wait for the candle to cross. And we will have to wait for the slow bus to turn back red, of course. These white arrows are not trade signals. This is a question which is often asked. These white arrows are not trade signals. They are simply indicating when our two ETF lines are crossing, either downward with a down white arrow or upward with an up white arrow. And we have always to wait for the close of the candle. You see how the white arrow appears and disappears when the price moves upward or downward until the candle closes. When the candle closes, we will have the definitive status of the arrow being there or not being there. So for the moment, we don't know if the slow bus will close green. We have to wait to be sure definitively. We need to wait 30 minutes. But of course, we will not wait 30 minutes. So, and I will ignore the long trades because my context is going short on the euro card. The candle will close in 2 minutes. Will this be enough to take back the slow bus to red? The card is very strong. The euro is weak. The US dollar is pretty much weak too. So we have still good opportunities for a short trade in these two pairs. Usually a press conference lasts between half an hour and 1 hour, depending the comment the central banker must make and depending also on the number of questions which are asked during the Q&A segment. Usually there is a Q&A segment after the explanation by the central banker, but usually the Q&A do not provide additional informations. So the candle will close in 20 seconds. Most probably the white arrow will stay there, but we will still have to wait for the slow bias to turn red. Okay, the candle has closed as a red candle. Should the slow bias be red, this would have been a valid exit setup, but because the slow bias is green, so this red candle is not a valid short setup. We still have to wait. This is very, very sensitive because with the next blue candle, the ETF lines are again crossing upward. So the ETF lines, when there is some reversal, may be very, very sensitive. This is why we have to use them in combination with the companion indicator. So patience, we need to wait for the right conditions before taking a trade, and discipline, we apply the rules without deviating from the rules. When we have graduate students with the max, a common error they are making, because of course when we trade there are fears which develop, and that's normal, we are human beings and we live with our emotions. Many traders, professional traders, say that we have to control our emotions. I do not agree with that. I prefer to say we are human beings with our emotions. Our emotions we can learn a lot from our emotions, but if we are not overwhelmed by our emotions, we can trade with our emotions, but we need to control our decision and our action. And so being disciplined is controlling our action. And so a common error I often see with our new graduate student is the following. When an entry setup appears, for example, this candle was an entry setup bar, they wait for an additional candle to have some kind of confirmations. But it is wrong. When we have a valid setup, and this is why the setup have been defined that way, when we have a valid entry setup, so when all the conditions are fulfilled, with no hesitation, we have to push on the button. And similarly, when we have an exit setup respecting our trading plan, we have to push without hesitation on the MX or the XXX button, depending on the exit setup. So we have to take an action without hesitation, without waiting for more possible confirmation. And our practice session have the aims to refine that psychological aspect of trading, showing that it's always better to react immediately when we have the right condition, not waiting for some elusive confirmations. How do you train your student to do that? We use during our practice sessions, because the practice sessions are held on Saturday, the markets are closed. So we use a simulator with MetaTrader. So we use a Forex Simulator, indeed. It is a very, very nice tool, equivalent to the replay in NinjaTrader. So it is a tool which is called here Soft4FX Forex Simulator. It is an expert advisor. And when you replay a chart with that simulator, you can move backward, forward, which is very nice. You can move your chart bar by bar, or any bar of any time frames at a time, forward or backward. You can move your chart tick by tick, second by second. So there are a lot of possibilities. So you can use with this simulator. It's really, really a very, very nice tool. What's the name? Soft4FX. You see here on my chart, in my navigator panel, Soft4FX Forex Simulator. No, it is not Forex Tester. Not Forex Tester. Forex Tester is a good tool, but it has not the nice feature the Soft4FX Forex Simulator has. This is the best simulator I have ever seen since I'm using MetaTrader for years now. So this tool can be downloaded for free. There is a license to pay, a license I think of each coder is asking for a $99 price, one lifetime fee. But with the paid license, you can simulate the execution of orders. If you use the free version, you cannot use the trade execution, but you can use all the other features of the simulator, and you can mark your chart manually. For example, when you see a valid entry setup, you can mark manually, as I have illustrated several times. For example, here, I could have marked my entry that way. And then if the price hit that mark, you consider you are in the trade, and then you handle your trade. So you can use the free version without any problem. And we make an extensive use of that tool in our practice session. Now let's see if the price will succeed to come back. Oh, thank you, Sana. I appreciate. Have a good meeting. Take care, keep safe, and see you later, perhaps in our Max Primer course. And you will have the video available for the rest of this session. So don't worry for that. Craig will take care of all of you to send you the link to download the video or to watch the video. Now, an important aspect of the max which seems to appear now, let me check also with the US dollar CAD. Yeah, with the US dollar CAD. So, and with the Euro CAD. The Euro CAD is the best position for the moment to have a possible short setup. Let me check quickly the pound CAD also. Or the pound CAD is still making its retracement, and the price is even ranging. So, an important aspect we consider in the course is what we call the price modes. We have two types of price modes, the local price modes and the global price modes. The local price mode is made of three modes, three local price modes. We have the trend mode, the counter trend mode, and the consolidation zone mode. And the global price mode is made of two modes, the choppy mode and the spaghetti zone. Here what is happening now is the price is entering into a consolidation zone mode, which is a local price mode with the EuroCAD. And to do that, we use the Bollinger Bands. So you see these gold and green bands are the Bollinger Band. You can easily recognize them. And so now the price is entering in what I call a consolidation zone mode. By the way, you can see that the price is ranging. The best way to convince yourself that the price is ranging is to draw a rectangle surrounding the price, and you can adjust the top of your rectangle and the bottom of your rectangle to embrace most of the movement, and you can see that because the price is bouncing from one side to the other side of the rectangle, the price is really ranging. So we are in a consolidation zone mode. This is also confirmed with the Bollinger Band indicator, and in such a case, we have to define either a support level or a resistance level and wait for that level to be broken. Because we are expecting a short trade, we will have to draw a support level. And we will draw the support level. We have rules to draw the support level. And the best support level we see here is at this point, on this level. And so we will have to wait, furthermore, to have a valid entry setup, the breakout of this support level. And when the breakout will happen, we will have to check all the conditions to see if we have a valid entry setup. And among them, of course, we will have to see if the slow bias will turn to red. The global price mode, the most important one is the choppy mode. And the choppy mode is market conditions which is challenging to trade. Let me try to find an example of choppy mode. So this is an example of a choppy mode. All this behavior, you see how the price is moving in a complete erratic way in a global range which is 19 pips. This is not really a choppy mode, it is more a spaghetti zone, but it is between a spaghetti zone and a choppy mode. And let me show another one, a valid one, of course. It's not a very large one. This one, maybe. Yeah, this one. This one is also a choppy zone with a small directional bias. You can see that the price here is going downward that way. Now it depends how you draw your rectangle. If we extend the rectangle earlier, and we can see that this directional bias is not necessarily meaningful. And we have to take the largest possible choppy mode, starting possibly at the beginning of the day. So we can see that we have no real directional bias. And the size of this choppy mode is around 40 pips. And so trading inside such a choppy mode is challenging. And in the course, we teach how to trade inside such a choppy mode. Now, will we have the breakout? But the breakout will not be enough. Okay, the breakout will not be enough because of the slow bias, which is still green. So in the max course, in fact, what do? We define the price mode, so to describe on the technical point of view what the market conditions are, because we do not consider the entry setup exactly the same way if the price is in a trend mode or in a contraction zone mode, for example. We do not handle the trade the same way if the price is in a choppy mode or not in a choppy mode. Then we define all our entry setups. The entry setups are the set of conditions when we have possibly a trade to open, and then we define along the courses all our exit setup, the exit setup being an opportunity to either reduce a loss or to bank some profits. And so we have several types of exit setup, as I have already explained earlier today. So exit setup based on indicator, based on a combination between price action and indicator, exit setup with price action, exit setup with trend reversal, trend invalidation or trend exhaustion, exit setup with time consideration, for example, when we are facing an important event, a news release, for example. And these exit setup must be considered not as a way to predict what the price can do when the exit setup trigger, but a way to quantify the risk when a risk is appearing. For example, if you take an exit setup based on the Stochastic, you see on this blue candle here, or the previous one, the Stochastic makes a bottom, and this bottom may be considered as an exit setup. But is the risk associated with that bottom in the Stochastic an important risk? And this is what our exit setup will help us to appreciate. How is the risk or when is the risk becoming too much important to force us to take an action, a decision. So your slow bias has turned to it. That's possible, Shaibu, because it depends on the setting you are using. Here I have used a smaller setting of 5, but we can use 8 also. And with 8, indeed, the slow bias has turned back to green, to red. And so indeed, in this case, you have the valid setup. And so we use an 8 setting or a 5 setting depending how we perceive the market condition. When we expect important trends, we can use an 8 setting. When we expect some volatility or some low price action, low level of momentum, we can use a 5 setting. Now, of course, with a central bank decision, it is often advised to use an 8 setting. But sometimes I still like to use a 5 setting. So here in this case, so we have indeed a valid setup. And so let's consider that. Let's hope we will have some movement before the end of this session. So we have an entry setup. Is this entry setup valid? Let me check. So yes, here. Okay, we have a valid exit setup, so here. And so I will make my entry if the price reach this level at 97. So here, let me put the horizontal line exactly at 97. Okay, if the price hits my horizontal line here, I will make my entry, and I have still to check if my stop loss is good, and my stop loss is good. I can even reduce it a little bit around this level, giving me a stop loss of, it will depend where the price will be. So I will have a stop loss size of approximately 32 pips. This means that I will set my profit level at 16 pips, which will be right above this support level. 16 pips, 17, 16, yeah, we are good. Okay, that level. And so now let's see if the price will indeed hit our entry level. Now with this blue candle forming, it will be probably closed as a blue candle because we are left with less than 2 minutes. I will have to readjust my support level. We have rules to that. Oops, sorry. And I will readjust it. So right in this area, which is now more appropriate. But it does not change fundamentally the level of the breakout. We are very strictful to define our support level and then later on to possibly adjust that level of the support level. Let me take a small sip of water because my throat is drying. You see, these frequent ups and downs in the price is due to the press conference, which is still holding. Is it okay, Shaibu, when to use a 5 or 8 setting for the slow bias? So when you expect nice movements, because we may have a very, very important news, for example, you can use an 8 setting if you expect a high volatility or possibly a low momentum, because the context is not necessarily clear. You can use the 5 settings to have the slow bias a little more reactive. And as you can see, it's not because we have the breakout of a support level in a concession zone mode that the price necessarily follows through. And this is why it is important also to draw correctly the support level or the resistance level if we look for a long trade, and wait for the breakout and then define the entry level. And you observe that I don't make my entry immediately at the close of the setup bar. I define an entry level which is a little bit lower, and there is a specific reason for that. I can explain that reason. When we have a short entry setup, when we have a red candle, we can ask who is in control of that movement at that moment, the buyers or the sellers. And in fact, the answer is obvious. The sellers are in control. So this means that we have a selling pressure when a short entry setup candle closes. And in order to open a short trade, I want to see that the selling pressure is still present. And this is why I define an entry level a little bit lower. And if the price hits that level, then this shows that the selling pressure is still present, then I open my short trade. But if the selling pressure disappears suddenly because some buyers are jumping into the market stronger than the seller, then I postpone my entry. I don't make my entry. I wait for a better opportunity. And doing so, we avoid many, many bad entries. Let's have a quick look to the pound card. So the pound card is not moving at all for the moment. The price is ranging, so between two resistance level. So we have to wait, just patience. Just hold on 1 minute. Okay, I'm back. Our support level is still valid, so we will have to wait for the next breakout. So 30 seconds to close the candle. No breakout yet. Now, when the context is good, and I consider that the context is good, we have to be patient because sooner or later the trend will move in the direction of the context. And this will give a good trade opportunity, but we need to be patient. And when we follow the global context, so with the max, we get a 90 to 95% winning rate, not 100%, unfortunately. I don't believe in the 100% winning rate, but 90-95% is a great winning rate. Of course, you could argue the following points. When you make your global context analysis, you may be wrong in your analysis, and that's true. And sometimes I'm wrong, because we cannot be informed of all the driving factors in the market. Sometimes small details we miss may have a deep influence in the market. And this is why analyzing the context is a difficult task. It takes time. We need to develop some experience about that aspect, but it helps greatly. Let's suppose that my global context analysis is wrong. So for the EuroCAD, my context is to trade short. But if I don't get a short entry setup, I will have no trade. And when the context analysis is wrong, so most of the time we have no trade. So no trade, no pain, no loss, no pain. But fortunately, we are right most of the time, and when we follow a certain number of pairs, so we are not wrong on all the pairs, on all the instruments. If we take, for example, an index, let's come back to the Nasdaq, for example. My context was long. Oh, I have already opened the Nasdaq chart, so here. My context was long, and you see a long trade would have been nicely possible. If I take the S&P 500, so here, we will have most probably the same thing. Oh, it's more choppy, more challenging to trade, but still possible to trade that up movement. If I take the Dow Jones, let's see the Dow Jones. So the Dow Jones has reversed. We have something which is not coherent in the different stock market in USA. They are diverging somewhat, showing that some risk are appearing in the stock market in USA. And so we have to be aware of that. Some stock markets are going upward, some are going downward. So I consider we are at a critical point in the stock market. Does this mean we will have a crash like some traders believe? I don't know. And I don't care. I trade what I see based on my context analysis. If I take the German DAX, the German DAX usually follow the Dow Jones. If I take the FTSE 100, my context was long, so a nice long trade was available, missing the reversal. And so I don't have here on my, I should have, I did the Nikkei. So this is how we trade, so in agreement with the context. For the pound US dollar, let me show you. Pound US dollar, so it was short, you see, short. And if we take the pound US dollar chart, pound US dollar, for the entire day, starting with the London Open, the London Open is here. You see a nice short trade, and now possibly another more challenging trade. We are now in a choppy mode, in fact, in the pound US dollar. But a very nice short trade, so with the London Open. Very easy to handle, so a bit touchy to handle carefully the exit setup. But you can see here a very nice exit setup with this long bar. We have a nice long bar, and this long bar alone would have made the trade risk-free. When we get a long bar in the direction of the trade, most of the time we get a nice risk-free trade. These bias I'm preparing every day. So for 17 Forex pairs, 6 stock market indices, 2 commodities, 2 bonds, the 10-year US Treasury bond and the Euro bond, and also for the VIX. So 28 instruments. So is a service I provide. Not for free, because this represents a lot of work, but there is a small monthly fee, and these bias are available for anyone. It's not necessary to be a Max member to have access to these bias through the monthly subscription. If you want to have access or to have information about these bias, you can contact Chris or Craig. So there is no problem. And the link are given in the chat area of GoToWebinar. So you have the 2 links for the 2 courses, the primer and the standard course. And I think that Craig will also post in the chat area his email address if you want to have some additional information about the price levels and the bias, the global context bias. Yeah, Craig has posted in the question area, so his email address, maxtradesforyou@gmail.com. So let's see if the price will decide to move. Normally we are approaching the end of the press conference. But we are also approaching now the moment when some traders, especially in USA, will take their lunch. So around this period for around half an hour, sometimes 1 hour, and then we'll have the rest of the US session to consider a possible trade on the CAD pair, because the CAD is an American currency. The general rule, but it is not always 100% respected, of course, because there are always exceptions, but the best session to trade an instrument is the following. If we consider a pair, a Forex pair, a pair is always made of 2 currencies. For example, let's take the Euro CAD. It is made of 1 European currency and 1 American currency. And so the currencies tells the corresponding session which are the best session for that pair. So we have the European session and the US session. If we take the US dollar CAD, most of the time the American session or the US session is the best session to trade the US dollar CAD. But of course there are always exceptions, and the exceptions are when we have a news release. When we have a news release, the pair can move when the news release happens. So this is for the Forex pair. For the indices, if we take, for example, the S&P 500 or the Dow Jones or the Nasdaq, usually the best moment to trade the indices is when the underlying stock market is open. So with the Wall Street open in USA. But because the indices are traded almost 24 hours, so we can trade these indices at any moment during the day, because they will be influenced by any other external factors like the geopoliticals. And so you have to decide yourself with your own constraint what is the best moment for you to trade. And so depending on your best moment to trade, you will have to choose the best instruments to trade. And you will have the same thing for the commodities. Not all the commodities are traded at the same time. They have specific times to trade when the underlying is traded, so in the market. For the bond market, so each market has its own specificities, and you have to learn and understand these specificities and then to adapt to them. Understanding how a market and when a market is working is a true edge for any trader. It's not because the Forex market is open 24 hours that you can trade 24 hours. That's not true. It depends when the highest liquidities are traded, because it's the liquidities which creates the trends in the market. Oh, good morning, Alonso. Had to step away for a bit as he found a trade that meets the criteria to play. No, not yet. We had a first trade a few minutes after the Bank of Canada announcement, but since then the market is ranging. We can see on all the cards the market is ranging. So we are still waiting for a valid entry setup. In particular in the Euro card, which is one of the best opportunities to trade for the moment. So the price is clearly ranging, and we have to wait for the breakout of that range before considering a trade. So it can take time. The longest time I have seen in my trading activity since 2008 has been 4 hours, I think, after the news release. It was a non-farm payroll several years ago. There was a surprise in the non-farm payroll, a big surprise, but it took the market 4 hours before deciding to move in the direction indicated by the news. No problem, Alonso. Oh, I have closed the trade at break-even, but accidentally I was explaining something, a concept, and I have accidentally closed the trade with a tiny profit. But the trade would have been closed anyway, almost at break-even. Because as you can see, the entry was here, right on this point, and the price has not moved at all. The price is really ranging for the moment. Okay? And now we have to wait some more time because our slow bus is turning again to green, so we have to wait. Gary is asking, did you personally trade today? I have traded this morning, Gary. Yes, indeed. I have taken a nice trade, for example, on the DAX. If I open the DAX chart, which is right here, or I can use this chart. So I will put the DAX on it. So here, the London Open is here, and I have traded this movement here. My context is long for the stock market, and so I have traded that movement. Yeah, it's possible that we may have on the pound US dollar and pound yen. Let's look here, the pound US dollar, nice movements. That's a possibility. Okay. So nice movement to the downside. My loss was short on the pound US dollar. I can show you that. Pound US dollar short. And then you said the pound yen, my bias was short also on the pound yen. And on the pound yen, if I take the pound yen, where is it? It is here. See again a nice short trade after the London Open. And now the price is ranging, not a surprise. The pound yen, the price is ranging. We are in a choppy mode. The pound US dollar is ranging. So we are in a choppy mode, in a rather large choppy mode. Yeah, not so large, less than 40 bits, but still a choppy mode. So they are not the best opportunities for the moment, but they were nice opportunities. And I have taken also a short trade precisely in the pound US dollar. I have taken that short trade. So after the London Open, I have taken that short trade. So here, that short trade here. I have missed the last portion of the trade because there was a small trend reversal. So here, so I have closed my trade on the trend reversal. So these are the two trades I have taken today. Okay, it's time to wrap up because now the market will usually slow down a bit during the US lunchtime period. The market has not cooperated in terms of movement with the Bank of Canada news announcement. That's a bit a pity, but this is how the market is. But at least this has helped me to explain some of the concept of the max. So if you have other questions, so I will be glad to answer them. Otherwise, we will wrap up here. François says, if you trade M30 chart, or 30-minute chart, is the short-term bias valid or better to use long-term bias? I'm not sure to really understand your question, François. The 30-minute time frame is still a small time frame. And so when you use, let's put here the 30-minute time frame on the EuroCAD, okay? 30-minute time frame. Then one thing you have to change is the setting of the slow bias. This is the only setting you have to change, and you have to take, so here, 30-minute, you have to take the 4 hours time frame. Here. And so if you trade based only on technical aspect, you would trade long when the slow bias is green, short when the slow bias is red. But using the spreadsheet, of course, the EuroCAD, my bias for the EuroCAD, let's check again, the EuroCAD is long. I would take only the long trades. And so the long trade, so today would have been, so this up movement. Okay? And for the EuroCAD or for the CAD pairs, however, because the news has been rather positive by the Bank of Canada, after the news release, I would change my bias to short if I see a short entry setup. So this means that in my spreadsheet, so here, but it is not the case today because I will wrap up my session very soon for the London close. So we can change for the CAD pair, we can change the bias in favor of the CAD. So for a pair like the US dollar CAD, it's already down. For the pound CAD, it's already down. So for the Euro CAD, I will change my bias to the downside. But I will not do that because personally I trade the 5-minute time frame. Okay? Okay, let's come back to the 5 minutes. So here, and let's change back the slow bias to 30 minutes that way. Okay, so no other questions about what I have explained today or on any other aspect of the max? Usually we try to make these open house sessions around a news release because it is when we have the highest odds to have a movement, but this does not always happen, of course. Do update global context daily or once a week? Oh, no, it's daily. Every day. In fact, we have 2 levels of bias, Gary. We have here these bias we call the short-term bias to trade essentially the 5-minute time frame, the 15-minute time frame. But for those of you who trade the 4-hour time frames and higher, we have also a long-term bias. A long-term bias for all these, the 28 pairs, the same 6 stock market indices, the 2 same commodities, and the 2 bonds and the VIX. So we have long-term bias and short-term bias. The short-term bias is more based on the market sentiment, and the long-term bias is more based on the fundamentals. Vishal asks, if I purchase the course today, will I be able to get all the course chart template and indicator today? No, you will get the template and the indicators at the end of the first session, Vishal. For the Max Primer, you will get the complete primer template and indicators, and for the max standard, you will get progressively the indicator when we explain them, always at the end of each session. Just to avoid you to be distracted by things you have not learned yet, because this is a temptation by some students. We have seen that in the past, if they get too many tools before the explanation, they will develop bad habits trying to, because they are curious, and that's normal to be curious, but the risk is to develop bad habits. So we prefer to deliver the template and the indicators or the tools at the end of each training session. Okay, if there are no other questions, so it's a good time to wrap up here. I thank you very much for your participation today. If you have any further questions, feel free to contact us. There is no problem for that. And so we will answer you, of course. I wish you a great rest of the week, a great weekend. Keep safe, you and yours, in this still problematic situation. So pay attention, be prudent, and so see you later, perhaps in our next Max course, which starts next Thursday at 3 p.m. Eastern Time. So thanks again, keep safe, and take care. Bye for now.